Hi, this is Ben Reppond. Today is December 3rd, 2024. Wow, this is amazing. Here we are we're the last month of the year. Uh, Amazing. Um, I spent the last week with my family up in the mountains and amazing experience. Wonderful to spend time. I hope you had a good Thanksgiving, spending time with your family. And but now I'm still traveling. Actually, this is the first week of December. Still traveling. I'm back now down in the city, and not yet back home in Montana. And so I'm bringing this to you, while I'm traveling. Um, the theme that I'm thinking of today is what's going on. I'm always thinking about this. What's going on in the market? Now, I'm a tactical investor. We have a mathematical model and we have an AI model which is beyond mathematical. It is using um, pattern recognition with machine learning and AI, and so all of that is done mathematically. So I don't, to be honest with you, I don't really care what direction the market goes because I'm prepared for either direction, especially with the AI model because it does shorting. And so, but I'm going to bring this to you because I know probably a number of you are buy and hold investors, and you want to know, what's going on in the market, and I'm sensitive to that, so I'm bringing you that information. So the I'm going to show you two views. One is a view that says we are going up from here. This is a continuation of the bull market of 2024 and beyond. The other is a view that says the market is exhausted and from here it's probably going to go down. I'm not going to say which one I believe in because I really, if you said, Ben, do you believe in that the market is trending and going to continue to go up, or it's mean reverting and from here it's going to go down, I would say yes, because I don't I think either is possible. But I know that some of you don't look at it that way, so I'm going to bring it to you from that view to say what would be helpful to you. And so I'm going to give you some views that show that um, it's going to continue up or it's going to go back down. What my view is that I think both. I think it is going to go up from here in the short run. It seems to have momentum ahead of steam and in the short run. Long term, I don't think it's going to last because I think the valuations are just so high that it's got to revert back to the mean at least for a while. And I don't think a crash doesn't seem in our future. I mean, at least in the short run. Maybe over a longer period of time, you'd say at some point, yeah, it's going to crash. But there are many people who I have listened to their videos and read their material who think that in 2025 the market is going to crash. Okay, I will accept that as a possibility, but it's not my particular view. I don't think that that is in our future in the short run. If you said longer term, yeah, possible. Okay, so I'm going to play for you, beginning with a piece that's an optimistic view of Tom Lee. Now, from Fundstrat, Tom Lee, I've not followed him for a long time, for a year or two. And what I've found is that he has actually been fairly accurate in his predictions. And whether you agree with him or don't agree with him, the I always kind of look at, I try to take a neutral view, and I'd say from his um, what he has predicted, it's actually been pretty accurate. So he's not a big name on Wall Street, but CNBC plays him a lot. And yeah, so anyway, I'm going to play a piece from Tom Lee and let you assess from there. And the and then I'll take you into a couple of other pieces that will give you different perspectives. Both of them the first two are more optimistic. The third one is more pessimistic, but all from what I consider to be credible points of view. So take a listen.
Is there much left to impress investors heading into next year? Here to take on that question, Tom Lee of Fundstrat. He joins me at Post 9, also a CNBC contributor. Tom, good to see you. Thanks for coming in.
Yeah, great to see you, Mike.
So we can stack up all the positives. I mean, I know you've been kind of in gear with that idea that the economy would power through, inflation would come down, the Fed could become friendlier, earnings are going higher. Big question to me is, how do we set expectations for the year to come, given that? That's all in the books.
It's a great question because, we have two back-to-back 20% years, and now investors are wondering how much good news is baked in. But if we look at the 2025 environment, it's a great setup because we have a new administration coming in that's maybe pro-animal spirits, a Trump put. We have a dovish Fed, and as you're pointing out, interest rates are kind of calming down after rising. And we know there's still $7 trillion of cash on the sidelines, and I think sentiment's coming back into check. You mentioned that before with the AAII numbers. So I think it's a good setup for investors. I wouldn't be too worried about the next 12 months.
So don't be too worried. I mean, it seems as if there are all these supportive factors, and when you mentioned the 20% up years in a row, history says actually, the following year is up more often than not as well. What do you mean, do you think, specifically by the new administration being pro-animal spirits? First of all, it's true.
Yeah.
You've kind of seen it at work. It seems to pull in that direction, but are there specifics that the market is fixated on that it's going to drive that dynamic?
Yes, I think that the market's trying to figure out exactly how this animal spirits plays out in markets, but I would say we've got a Treasury Secretary that equity markets approve of. We do know that the last Trump presidency cared very much about what stock prices do, and Jeremy Siegel said this is the most stock market focused president ever. And I think that the uncertainty is around trade and the potential risks around tariffs, but we'll have to see. I mean, that's something markets are going to have to deal with it from an uncertainty perspective.
Okay, the next piece is with Danielle DiMartino Booth being interviewed by Charles Payne, and it is her view is that the economy is strong, but the labor market is weak, and that the consumer confidence is strong. When will the consumer decide that this is time to pull back? That is not right now seem to be a possibility, but she is cautiously optimistic. That's the way I would view it. So take a listen to the view from Charles Payne and Danielle DiMartino Booth.
To QI Research, their CEO and chief strategist Danielle DiMartino Booth. First, let me just pick up on the conversation about where the economy is at this very moment. How would you rate it? Where do you see it?
So, Charles, I think the best that I could rate this economy right now would be middling. To your last guest point, there is a ton of optimism. I mean, you can feel it. It's palpable. It's in the air. But when you look underneath the hood of these surveys, what we're seeing is that the prices that are received, but whether it's services or on the manufacturing side, it's just not there. We had the largest 1 month decline in the services sector in the Philly Fed region, even though optimism about the future did indeed increase. In fact, that's a dichotomy that we've been seeing throughout the release of all of these regional surveys, is that employment and capital expenditures, prices that they're receiving, pricing power remains very weak in the here and now, but optimism for the future has gone through the roof. So what we need to do now is deliver on it. And let's see how quickly we can get the optimism to become the new reality.
Yeah, and I guess as an economist, it's hard to quantify that, right? But we know that there's a large aspect of self-fulfilling prophecy to a lot of these things. So at least that the general public is on board is a big part of this, isn't it?
It certainly is, Charles, but I think the ones we're really going to have to get on board are those who occupy the C-suites. We had fresh data out of Challenger, Gray, and Chris this morning that shows that I think we're almost at 2,000 CEOs turned over in 2024. That means that the boards of directors are bringing in change agents. And until we stop seeing the layoffs turn into hiring announcements, I don't think we're going to have turned that corner. And that's where my focus is right now the most as we head into the holiday season, Charles, is will we see hiring in the new year?
Right. You know, one thing that you've always pointed out, and it's great that we had all this economic data today, is because it's like the disconnect, particularly government data, to Main Street, right? I mean, it's maybe the gulf has never been this wide.
It certainly hasn't. You know, just reading through the recently released at the top of the hour, the Fed meeting minutes, and you know, hearing how disassociated Fed officials still are. You know, they're characterizing this economy as being extremely strong, and the labor market as being super tight. I think the average man and woman walking the street right now, everybody whom knows somebody who's lost a full-time job and they've picked up a part-time gig in its place, they would not be characterizing the economy the way that Fed officials and politicians headed into the election were mischaracterizing it, in my view, Charles.
Yeah. You know, it's so funny because the quits rate, the way it's falling corroborates what you're saying. And even today, with consumer confidence edging up a little bit, that one key question, jobs plentiful, dropped from 34 to 33. So that part of it, and that's what the Fed's been worried about, I think, at least Jay Powell, a crumbling labor market that's not reflected in the data. And if you wait too long for it to be reflected in the data, it might be too late to fix it. Danielle, thank you, my friend. Have a great Thanksgiving. Talk to you again soon.
Thank you. Happy Thanksgiving, Charles.
You too. All right.
Next, I'll play a piece from Adam Taggart interviewing Henrik Siebert. Siebert is a contrarian, and this is a great place to play this piece because he he's always like when things are high, he thinks it's going to go down. When they're down, he thinks it's going to go up. There is absolutely a case for contrarians. I'm probably more of a contrarian than I am a trend follower, but there are times where I think trend following is appropriate. But I completely understand the view of contrarians. So listen to this interview that Adam Taggart is conducting with Henrik Siebert, and why he says that we are so elevated at this point that the only place to go here is to go down. Thank you. Take a listen.
No, I think it's pretty clear for a lot of people if they look to places like China or even to Germany that things are not fantastic, that there are things going on there that would clearly define or clearly look like what is a downturn or recession or something like that. But when it comes to the U.S., everybody seems to think that everything is fine, and we have a booming economy, we have a strong labor market, and we are coming out of a bad time, and we are about to see, you know, recovery and new growth picking up. That's just not what I see, and I think people are just like in 2022, where everybody seems to be so gloomy about the whole outlook of the economy. I was actually very optimistic then because my business cycle did tell me that we were rolling into a recession at that point. But we've come to another place now, and we have had a very, very strong move in the markets. We have seen the economy come full cycle now. We have seen the business cycle starting to roll over. Leading indicators have been declining for more than 2 years, which in my world indicates a recession that is coming. And it's just been a little longer than it usually is before we actually see the onset of this recession. And that's why people may now think that, well, we escaped it. This time is different. We're not going to see a recession, even though we have all the indicators. So, but I think that's wrong, and I think it's going to hit us hard next year.
Okay, so you say we're sort of at like an inverse moment to late 2022, where everybody was on the same side of the boat back then, super bearish, expecting that a recession was imminent in 2023. Never happened. We ended up having, you know, really a strong economic performance, plus the market's just caught on fire for basically 2 years since. You're now saying you see us as sort of on the other end of that cycle where everybody's now on the bullish side. Everybody thinks it's going to be summer forever, and they're likely to be surprised going forward. You're nodding as I'm saying this, but am I capturing your general opinion correctly?
Yeah, 100% correct. Yeah, 100% correct.
Okay.
It's always like that. Also, we see that people are, by the end of it, by the end of the cycle, then people are getting over enthusiastic about what they see. But right now, we see that everybody is at the other end of the other side of the boat again, like in 2022, where everybody was being so bearish on things and thinking we were seeing the economy fall into a recession. Now we just see when the business cycle is coming to the other end, that people are now starting to turn optimistic, positive. And there is a famous sentence in The Big Short, in the movie Big Short, where we actually see that the character says, well, nobody really looks. And if they really did look under the hood and look into the labor market data, look into the leading data, well, then we can actually see that the economy is not doing well. And I think that is really the case here. People are not looking.
Okay, thank you for listening. From here, I wanted to show you this cartoon. Thanksgiving is over, but inflation is not. Inflation is, um, still going strong, and it should go down. They're hoping it's going to go down. Um, so I don't have a view on that really. I happen to agree with the thinking that inflation is probably going down, but it's stubbornly sticky where it is. And um, anyway, thank you for watching. If you have questions or comments, leave them in the comment section below. Thanks.